Hey everyone, and welcome to today's live session. Now, this is my very first live session with you guys for the month of July 2025. And whether you're just starting your trading journey, a beginner trader, or you've been grinding in the charts for a very long time, or maybe an intermediate trader that is just trying to figure out strategies, psychology, and all that. Today marks a fresh start. Today marks a clean slate and a new opportunity to trade smarter, sharper, and with more clarity than ever before. Now, before I even go ahead to talk about today's content, for today's session, let me know in the chat if you guys can hear me clearly. Uh, Let me just know in the chat if you guys can hear me clearly, and then we can get started. And while you do that, you can also use the opportunity to let me know your name and where you're watching me from. Let's get to know ourselves before we start the stream. And also, while we wait for, just give 2 minutes for other persons to join today's session. And this is going to be an amazing session. It's not just about catching pips, it's also about learning how to think like a trader. It's about mastering your timing, sharpening your entries, and controlling your risk like a professional. Okay, it's the month of July, a new month, new data, new setups, and new lessons. You're going to learn amazing things today. You're going to learn how to analyze the markets, using live trading structure. You're also going to learn the right way to read the economic news, economic events like the NFP that was released today. And you can also use that understanding to read news like the CPI, PMI. We'd also go to the live chart, and I'll show you how to apply these tools, for retracement, Fibonacci retracement, supply and demand, and also extra, confluences to your charts to give you that confidence to execute trades comfortably. All right, so it's going to be an amazing one. The goal today is to understand the charts to give you or help you with habits that can keep you profitable in the market. So we're going to be analyzing and trading what we see and not what we feel. We would follow structure and not emotion. All right, let's look at the chart and see who we have for today's session. Moyo from Lagos can hear me loud and clear. Welcome, Moyo. Nath from India, welcome. Chigozie watching from Jos, Nigeria. Welcome. Abdurrahim from Lagos State. Alan, Lagos State. Welcome. Welcome, guys. Now, let me know in the chat, what's one thing you're looking to improve in your trading? It could be a habit, right? It could be psychology, it could be strategy, it could be identifying the right entry, whatever it is. Let me know in the chat, what's one thing you're looking to learn in your trading, or you're looking to improve on in your trading. Hitawa from Umar here. Welcome to the session. Guys, welcome everybody. Welcome to today's session. Welcome to the new month as well. Welcome to Elevation. And today we're gonna learn. I'm gonna teach you guys how to make this month count. One setup, one candle, one trade at a time. Gideon David from Port Harcourt, welcome. Interestingly, that's my brother's name, but I don't know if he's the one in the session today. But yeah, welcome. Yeah, the question remains, what's one thing you're looking to improve on your trading? What's one thing you're looking to improve on your trading? And while you answer that, I'll just run through the disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. Now, for those of you that don't know me, I'm just going to do a brief. I mean, I've seen you guys' names and where you guys are watching from, so maybe you don't know me. I'm going to give you a brief introduction to who I am. My name is Ambrose Ebuka. I have 6 years of trading experience, and I've honed my trading proficiency and contrived various profitable strategies that include swing and scalp trading. Now, if you don't know what swing and scalp trading is, it's exactly why you have to stick to today's session, because at the end of this session, I'll make sure I explain to you what that means, and it can also help you determine the kind of trader that you are. All right. Analyze gold, GBP, JPY, GBP USD charts with an outstanding accuracy exceeding 85%, and I regularly backtest trading strategies for effectiveness. All right, so that's just an introduction to who I am. For today's agenda, we're going to be looking at the economic calendar. I'm going to explain to you guys exactly why you need to use the economic calendar. Very important. A lot of traders, overlook the economic calendar, but if you traded today, you would know why it's important to look at the economic calendar. Now, if you traded today, let me know in the chat. If you traded NFP today, let me know in the chat. And we're going to look at zone trading, which I'm going to be using for the analysis. We'll review the dollar index. I will explain what it means and how you can correlate the dollar index with other pairs as well. And we'll have a Q&A session. All right. If you have questions, you can always ask your question. So Abdurrahim is looking to improve on psychology and entry. Amazing. Nath says, I want to know how to make the right profitable entry, which is still awesome. Psychology. I want to improve in scalping. Chigozie says psychology and entry. Okay, it's really good that back in the day, right, when you throw the question of what do you want to learn, the response that comes is usually, I want to learn how to make a profit. I want to learn how to make money. But now, I think you guys are beginning to understand that the educational process of trading cannot be overlooked, cannot be overemphasized, right? We need to go through that educational process. It's not something that you skip, which is why, your responses are amazing. Let me see if you guys can still hear me. Okay. Which is why, the things you want to learn is exactly what you need to take you to the next level. And Abdurrahim, yeah, traded NFP. Okay, you guys traded NFP. Exactly. So you'd understand exactly why it's important to, look at the economic calendar. Now, this session is going to last for about 45 minutes. We'll have some extra minutes to answer your questions. So use the YouTube live chat to ask your questions during the webinar. I will continuously look at the live chat to see if you have questions, and I will answer them all. Oh, it's my brother on the call. Welcome, Gideon. Welcome to today's session. All right. Again, guys, if you have any questions, please go ahead and, answer in the chat, all right? Or ask in the chat, and I'll be looking at the chat to answer all your questions. Now, before we dive into the chart or, dive into today's content, let me ask you this, right? And this, even if you're a beginner trader, intermediate trader, advanced trader, this question goes to you, right? But mostly the beginner traders. You have to understand first why you're here to learn. Are you just here to catch pips, or do you want to finally understand why price moves the way it does? Because the difference between guessing and executing trades with confidence is the ability to look at the markets, read the market with clarity, react without fear, and stick to a process. So you have to ask yourself the question, am I here to chase signals? Am I here to chase trade ideas? Or am I here to become the signal myself? I always tell you guys that, a good understanding of the Forex market and the charts would make you see the market from a different perspective. It make you perceive the market just by looking at it. And we're going to do a quick exercise before we get started. I'm going to show you guys a chart. Let's go to an empty one. Let's see. Okay. It's the 4 hours. Oh, this one is not really empty, but I can just clear it out. All right. Now, this question is for everybody. So let me know in the chart, right? Just by looking at this is US 30 on the 4-hour time frame. Just by looking at this chart right here, what do you think is the trend? If you know the answer, let me know in the chat. Where is the US 30 market headed? What kind of trend is this? If you know the answer, let me know in the chat. Just by looking, we're not going to do any analysis for this question. Just by looking at this chart, Where is he headed? Hitawa says about the NFP, I was live, but I had no courage to enter the trade, though it went in my direction. Okay, we're still going to address fear and building confidence to execute trades. It comes from a lot of things, but we're going to address that at the end of today's session. Hopefully, you're here to the end so you can get the answer and understand it better. But looking at this chart, where do you think it's headed? Let me know in the chart. This is okay. Moyo says bullish. Hita says uptrend. Abdurrahim says uptrend. Gideon says bullish. Adela says uptrend. All right. Now, the answers were correct. Amazing. I'll give you guys that. It's a clear, just in case you thought it was a downtrend or just for general knowledge, it's a clear uptrend. Now, traditionally, you would learn that, uptrends are made up of higher highs, higher lows, higher highs, higher lows. But this is what I like to call textbook definition of an uptrend, right? Sometimes it plays out like that, sometimes it doesn't. But all you have to do is to make sure that you're able to spot a recent high that breaks above the previous high. Now, if the market continues to break above the previous highs, just like this high that we have over here, and then another one that we have over here, we are in an uptrend. We're going to get to all this. I just wanted to throw the question for you guys, so you guys can have an understanding. Now, the ZAP zone trading strategy that I use to analyze, this is exactly what it's about. I'll give you a brief introduction to the strategy, and then we can go to the economic calendar. We can start analyzing so that everything makes sense for you. So, what is included in this strategy? Your understanding of market structure. Now, it goes deeper than just looking and saying uptrend, because you have to understand exactly, supply and demand levels, which are the key levels. You have to go to the higher time frames as well. But that is what is included in the ZAP zone trading strategy. So you have to understand the market structure. Where is this headed? The trends. You also have to identify key levels, support and resistance levels, breakout, retest levels, and then you predetermine your entry and exit points. You can use the swings for that. You can use candlestick momentum for that. But the idea is to already have the price you want to enter and the price you want to exit even before executing the trade. Because a lot of times, traders have a certain price they want to enter. Even though we still have some traders that they don't even know where they want to enter, they just know that today they want to buy. They don't have a certain price they want to enter, but they just know that today I'm coming to buy and I want to buy. But with the zone trading strategy, you predetermine your entry first based on the confluences you've had and also where you want to exit. And the exit is made up of two things: your exit in profit and your exit in risk. And finally, risk management, which is your risk to reward and the use of proper lot sizing. Things that you want to determine first, even before you execute the trade. That way, you eliminate any form of, emotional trading. You're comfortable with your risk, you're comfortable with your entry, and you just allow the market to play out, which is one of the things that you should ensure you learn how to do in your trading. Now, what kind of traders is this suitable for? As you can see, all trading styles are here: the day trading, swing trading, scalping, position trading. I'm going to briefly explain what this means for you guys. So, the day traders are traders that look to open and close their trades within the day. Someone is saying in the chat that they cannot hear me. Guys, let me know if you guys can hear me. Someone is saying in the chat that they can't hear me. I don't know if you guys can hear me. But let me know in the chat if you guys can hear me right now. All right, perfect. So the day traders are traders that look to close their trade within the day, which means they'll be looking at execution on the lower time frame, the 15 minutes, you know, the 30 minutes, a maximum 1 hour time frame for execution, right? Because they want to close their trades within the day. The swing traders hold their trades for days, weeks, and even months, right? The scalpers are the get in and get out type of traders, right? They want to get in right now and get out. So they just come in the 1 minute, they look at the lower time frames. Let me give you guys an example. So let's use the Octa trader platform for that. Now, if you look at this chart, you will see that we have here M1, M5, M15, M30, H1, H4, D1. So we're going to start from D1, which is 1 day. What this means is every candlestick here that you see, green, red, whatever, each candlestick here opened and closed within 1 day. Each candlestick here opened and closed within 1 day. Now, if you execute a trade here, you're going to be looking at least a couple of days for that trade to play out. For example, right, if you placed a sell trade somewhere around here and you were expecting the market to come and make a retest at this key level, because obviously if you look at this chart, you know why this is a key level. I'm going to point it out here. You can see market reaction. It's going to take 1, 2, 3, 4, 5, 6, 7, 8, 9, over 10 to 15 days for this to play out, right? Now, if you go to the lower time frame, let's say the 1 hour time frame, you can now see that just from here all the way down to this point is probably about 12 hours, which is still within the day. Now, if you, and this is for the day traders, now if you go lower to like the 1 minute time frame, you'd see that from here all the way up to this point is just about 17, 15 minutes. Let me know in the chat if you're understanding. These are the different time frames and they fall in line with the different trading styles, because the scalper has no business with executing trades on the daily time frame. They only come in and come out. They get in and get out. The scalpers are, you know, they want to spend a few minutes in the market and that's it. Let me know in the chat if you guys are following. Let me know in the chat if you guys are following. Now, when do you use it? During volatile sessions. By volatile sessions, I'm not talking about when the news is being released. By volatile session, I'm talking about when, you know, there's an overlapping session. For example, the London session opens at 8 a.m., 9 a.m. The New York session opens at 1 p.m., 2 p.m. Now, each session lasts for 9 hours, right? So by that 1 p.m., 2 p.m., the New York session has overlapped into the London session. Now, both of them are opened at the same time. It creates volatility. Volatility is simply referred to as the movement of the market. Now, if the market does not move, traders would not make money. And that's why when you see, you know, towards the night time, when business hours are closing, you'd see that the market's going to be slow. But what do you really need? You need the market to move for you to make money. And you can also use major events, right? After major events like the NFP today, I'll show you guys how, you know, we're able to capitalize on a sell move just by combining our understanding of the market, the news itself, and a simple Fibonacci. Okay, someone's talking about my mic again. I can hear myself pretty clear. Let me know in the chat if you guys can still hear me. All right. So now we're going to go over into the economic calendar. I'll just do a review and then we'll go straight to live trading. All right, so this is the Octa economic calendar. You can access this from your the Octa Trader web platform, which is over here. You just click here and it opens the economic calendar, right? As you can see. So what we're just going to do is I'm going to reset this so that you can have an understanding of what it looks like if you're just accessing this for the first time. Now, if you've ever wondered why, the market suddenly spikes or crashes, even when everything just seemed very calm, like a few minutes ago, maybe you're looking at the charts and everything is steady, then boom, gold drops 100 pips in like 5 minutes. Or the US dollar, the dollar index just boosts. It's not magic, it's not, manipulation. It's just a news release most times. And that's exactly why the economic calendar is important for you. It's a schedule of those very moments when the market is waiting to react. Now, if you don't know what the economic calendar is, it's like a market roadmap, you know, gives you a list of important events and data releases from countries around the world that can move the financial markets. We have the NFP, we have CPI for inflation, we have central bank decisions like the interest rates, the changes on the interest rates, we have GDP reports, we have PMIs, manufacturing PMI, service PMI, trade balance, and a lot more. Now it shows you the dates, it shows you the time, so you can know when this news is going to be released. It shows you the country and the currency it's going to affect, so you know what is influence, what this particular news is going to be influencing. It shows you the previous value, right? It shows you the forecast, what the market expects this time. The previous is what happened the last time. And then it shows you the actual value, which is what really happened. And then you also have over here the impact rating, medium, low, and high impact. Just like the name goes, low impact would barely ripple the market. It's just going to be about just probably no reaction. Medium impact, the same thing. The high impact is the one that has a high chance of causing or bringing about volatility to the market. If you're a new trader, you can have all this included so you can just learn about what this means. For the knowledge, and make sure your time zone is set correctly so you don't miss out on the time the news is going to be released. But for the purpose of today's live session, I'm going to be sticking to just high impact events, and we're just going to review that. Hopefully you guys can see. Okay, yeah, so it has changed, and now we're only looking at high impact events. Now most of you be wondering, right? I have an understanding of Forex, technical terms. Why do I really need the economic calendar? Why does it really matter? Guys, markets are driven by expectation, right? Markets it's an expectation versus reality thing. When the actual result of an economic event is different from what was expected, you get big market reactions. I'll give you guys an example. Now, imagine the US is expected to add 110,000 new jobs, but the real number comes out at 147,000 new jobs. That surprise shows that the economy is stronger than expected and the US dollar would strengthen. Traders are going to pile to USD, Euro USD will reduce in value, gold will probably also reduce in value as well. And all that reaction came from one number, one event. So the economic calendar in itself is your weapon. See it as, two hands trying to lift weights. If you use one hand, it's more difficult. If you use two hands, the technical and the fundamental, it's better that way. So if you're a Forex trader, the economic calendar is non-negotiable. If you want to avoid, sudden volatility, you have to check the calendar. If you want to catch big breakouts, you also want to look at high impact news. If you want to understand why your setup is failing and why the market is just spiking you out, check the data that came out before blaming your strategy. Okay, the market itself is not random. It doesn't just move on its own. It's structured around economic events. And if you're trading without the economic calendar, you're basically driving blindfolded. So let's go ahead and analyze today's economic events. Let me know in the chat if you guys are ready. Let me know in the chat if you guys are ready. Let me know in the chat if you guys are ready for this fundamental analysis. Let me know in the chat if you guys are ready. Someone's still complaining about the mic. Guys, I can literally hear myself. Let me know in the chat if you guys are ready for the analysis, right? Now, if you do not know how to analyze fundamentally or, understand the economic calendar, this is for you. This is for you. Now, the first event we have on the list, and all these events has passed. As you can see, this is 3 p.m., which was the last one, and the time is currently 6:27 p.m. The first one we had was the AUD trade balance month over month. Now, the trade balance shows how much money a country earns from selling things to another country, right? This is called exports. It shows how much they sell, how much they export, minus how much it imports, which is the amount it spends buying things from other countries. Now, if a country's exports is bigger than its imports, it's what we call a trade surplus. And what really happened here? Australia was expected to earn over 5 billion Australian dollars from exports. This is after subtracting the imports, right? Remember, it's exports minus imports. So they were expected to earn about 5 billion Australian dollars, but they only made 2.2 billion Australian dollars, and that's less than half the expected amount. It's a big drop. Why is this important? What it means is less money is coming into the country. And I told you guys about what we call trade surplus. If the trade surplus is low, it puts pressure on the currency, and in this case, the Australian dollar. If people are not buying Australian exports, it means that maybe other economies are also struggling as well. Now you're going to see the Australian dollar, AUD USD, AUD JPY probably reduce in value. The next one is the Kaizen Services PMI, right? Now, what Octa does is, if you have access to this economic calendar, you can actually just click on each report, and there is a definition for each report, right? And also the impact, the meaning of the impact. A reading above 50 indicates that the services economy is generally expanding. Meanwhile, a reading below 50 signals that activity among service providers is generally declining and seen as bearish for the Chinese yuan. Now, the services PMI tells us how well businesses in the service sector are doing. Now, this includes things like banking, healthcare, retail, tech companies, transportation, and the score is over 100, right? Out of 100. Above 50 means business is expanding. Below 50 means business is shrinking. Now, what really happened here? Forecast was 51. We had a previous of 51.1%, and the actual was 50.6%. Can you guys tell me in the chat, is this bullish for the Chinese yuan, or is it bearish, or are you indifferent about it? Let me know in the chat. Is this bullish for the Chinese yuan? Is it bearish, or are you indifferent? Now, China is one of the largest economies in the world. So when its service sector slows down, it affects everything from energy demand to global trade. And that's why this report is important. Investors, traders, they see this as a sign of weakness in the economy. Now, a lot of you guys would, okay, so Chigozie said bullish. I want to see more answers in the chat. But while you guys are answering, right, now this is above 50, but it's still less than the previous 50.6. It's just barely in growth territory, and it's lower than last month. So it's not really bullish for the dollar. And like I said, I gave you guys a glimpse or a hint on the answer. Investors and traders can see this as a sign of weakness in the economy. So currencies that rely, this is probably going to happen as well in the coming weeks. Currencies that rely on China, like the Australian dollar, they might reduce in value. Up next, we have CPI for the Swiss franc, right? Year over year. When you see YOY, it means year over year. And again, here's the definition. So if you said bearish, I can see the answers coming in now. If you said bearish, that's correct. The CPI is the most common way that we use to measure inflation. It tells us how much the prices of goods and services have increased. In this case, YOY means year over year. So this is compared to the same time last year. Let's look at the report. We had a negative 0.1% at the last time this report was released. The forecast was in negative 0.1%, and the actual is now in positive 0.1%. Now, prices in Switzerland rose by 0.1% compared to last year. That is small, but it's the first increase after 2 months of slight deflation, right? Which is increase in prices. Now, looking at this statement, right, I want to give you guys a hint and tell you guys how you can understand the influence of this report to the market. Generally, a high reading is seen as bullish for the Swiss franc, while a low reading is seen as bearish. Let me know in the chat what you think this report will turn out to be for the Swiss franc, bullish or bearish. Let me know in the chat. Bullish or bearish? How would this 0.1% influence the Swiss franc? Remember, there are currency pairs like USD CHF, Euro CHF, GBP CHF, CHF JPY. These are currencies that are paired with the Swiss franc, right? But how would this affect the Swiss franc? Bullish or bearish? Let me know in the chat. Generally, a high reading is seen as bullish for the Swiss franc, while a low reading is seen as bearish. Exactly. If you said bullish, that is correct. The Swiss franc could strengthen slightly. Now we have what I would like to call the king of all news, the non-farm payroll that happens every first, well, I would say Friday of the month, but today it happened on Thursday. Obviously, you guys know why. Tomorrow is the Independence Day for the United States, so can't be having non-farm payroll coming out tomorrow, right? But it's been released today, but it's usually the first Friday of the month, okay? Now, what is the NFP? Again, you can always click here. Octa explains it correctly and helps you understand. It's the most important job report in the United States and even in the world as well. The non-farm payroll shows how many new jobs were added in the US. It's non-farm because it excludes farm jobs, government jobs, voluntary job, and a few others. The NFP is a direct measure of how strong the economy is. Now let's look at what happened here. The US added 147,000 new jobs, which is way better than expected. The forecast was 110,000. In the previous month, it was 139,000 jobs that were added. This month, we have an actual of 147,000 new jobs. This is why NFP is important, right? For if you trade dollar against major pairs, even minor pairs as well, this is why it's important. Strong job growth tells you that the economy is healthy. And if the economy is healthy, it tells you that the currency is strong. And the NFP itself affects anything from stock prices to interest rates to commodities, even digital currency prices as well. And we're going to go to the charts. I'll show you guys how the dollar reacted to this news, which obviously we're looking at a strengthened dollar as well, and also a reduced price on gold. But I'm going to show you guys exactly how the market reacted to this news. All right. But this is what NFP is about. And again, you can always look at this sentence. A high reading is seen as bullish for the dollar. Obviously, you guys can see that we had a higher reading than even the forecast and the previous. So bullish for the dollar, guys. And then we have average hourly earnings month over month. This shows you how much more people in the US are earning each month. And it's important because increased wages can lead to inflation. And what the central bank tries to do is they try to control that by raising or lowering the interest rates. What happened here? The wages rose by just 0.2%. This is less than expected, and it's also slower than the previous month. This report alone can give the Federal Reserve more room to cut interest rates in the future. All right, but it's expected to have just a slight reaction to the US dollar, especially if investors think that the rate cuts are going to be coming. US average hourly earnings year over year. Again, YOY means year over year. It just tells you what this report looks like for the previous year. It's the comparison to the same time this report was released in the previous year. Now, just call it the annual version, right? Shows you how much, the wages have grown over the past year. What happened here? 3.7%. The forecast was at 3.9%. It was previously 3.9% as well. The wages are growing, but they are still slower than expected because we had 3.9 last year. Okay, so this is a confirmation for even this one, the month over month, that the wage inflation is slowing. It's good news for inflation control, but it just softens. The hourly earnings itself is good news for inflation control, but this is going to soften. This report that we're seeing right now is going to soften the US dollar a bit. And, if we don't get any reports that gives the US dollar momentum, we're still going to get, continued down movement on the dollar. If I show you guys the dollar now, we're going to see that it's overall direction is down, even though we had this reaction to non-farm payroll. But if you look at the overall trend, it's still headed downwards. All right, what are we looking at? ISM Services PMI. Again, guys, you can always click to know what it means. Look at the last sentence to see how it affects the currency in question. In this case, it's going to be the US dollar. So if you don't know what the ISM Service PMI is, it's like the health reports for the US civic sector, and this makes up over 70% of the US economy. This covers areas like finance, healthcare, education, transportation. And as you can see, still over 100 as well. A reading below 50 signals that the service sector is declining, and it's seen as bearish for the dollar. A reading above 50 indicates that the service sector is generally expanding. And what happened? The PMI, the previous was 49.9, which was lower than 50. Now the PMI is back above 50 at 50.8, which means expansion after dipping below 50 last month. So this is also good for the US dollar. It's going to help the US dollar gain strength. If you're trading gold, the bullish momentum is currently at a pause. We're going to go to the charts and I'll show you guys that. So you might have to hold on for the buys on gold for now. All right, let me know in the chat now if you guys understand how to analyze fundamentally. Let me know in the chat if you understand how to use the economic calendar. Let me know in the chat right now. If you now know how to use the economic calendar, let me know in the chat. I'm going to go ahead and show you guys how to convert that, or how to combine your understanding of the economic calendar with the Forex market itself. So this is the dollar index, right? The DXY. And guys, we've been analyzing the DXY for a very long time. We're talking about over 3 years now. We've been looking at the dollar index. And I'm going to show you guys exactly what's going on. But before I even do that, let me explain for those of you that don't know what the dollar index is. The dollar index is what I call a strength meter for the US dollar compared to other major world currency, right? So the US dollar index, which is the DXY that you see up here, you can see dollar index, you can see DXY. It measures the value of the US dollar against a basket of 6 major currencies. Now we have, I'm going to tell you guys in order, right? The euro, which has the highest share in the dollar index. We have the Japanese yen, we have the British pound, we have the Canadian dollar, we have the Swedish krona, and finally, we have the Swiss franc, which has the lowest share in the dollar index. When the dollar index goes up, it means the US dollar is gaining strength against these currencies that I just mentioned. When the dollar goes down, it means the dollar is weakening against or compared to the currencies I just mentioned. I'll give you guys an example, right? Now you can see that the dollar has been trending downwards since February this year. If I go to GBP, you see that GBP has been trending upwards since that February, right? Because again, if the dollar goes down, these currencies I mentioned goes up. We'll check euro. You see that the dollar has been going down since February. What's going on with euro? Let's see. Going up. Can you guys see that? So that's just the basic definition of what's going on with the dollar. All right. And as you can see, dollar is still pretty much bearish, taking out all these key levels. And now we're finally trading below 97. Now, if the dollar continues, again, guys, I said this when the dollar was trading around this point, that if we continue to trade below this key level, still bearish on the dollar. We've broken below that, broken below demand zone here, which is our support, broken below that, and now we're trading below. If we continue to trade below this point, it's still bearish for the dollar. I don't expect the non-farm payroll news to take the dollar upwards. You know, we're going to need something more stronger than that. The dollar is still currently bearish, you know, but in terms of the reaction to the news, I mean, that's why you guys are having this spike to the upside, right? You know, the news came out around 1:30. Let's check that. As you can see, non-farm payroll came out around 1:30, and the news was bullish for the dollar, right? So if you check the dollar, you'd see at that 1:30, boom, we had a spike to the upside. Let me know in the chat if you guys are following. Let me know in the chat if you guys are following. You know, understanding the economic data like this gives you a superpower in the markets, because they're not just numbers. You see them as numbers, 50.6, 50.8. These are signals of real world behavior. People getting hired, businesses growing, businesses shrinking, prices rising, prices falling, government adjusting policies. When you learn to read and understand the signs, you just stop your guesswork and start to trade and invest in the Forex market with confidence. Let me know in the chat if you guys are following. And you can also let me know in the chat what pairs you guys are trading. What pairs are you guys trading in the markets? I mostly trade gold, right? So I'm just going to be analyzing gold for you guys. But what pairs are you guys trading? Let me know in the chat. Now, obviously, if you've been trading gold, you'd see that gold was moving in an uptrend, right? Let me go to even the daily time frame and show you guys that. We had this nice upward move on gold. I'm just going to be very, very brief and precise with this. So, guys, stay with me. And I'll also be very, just going to be very comprehensive for you guys. No twisted words, simple analysis. All right. Now, what can we see? What's going on with gold? We're seeing that this uptrend has started to reduce momentum. And why do we say that? Remember, an uptrend is made up of higher highs and higher lows. But what has currently happened is we have two new highs that have failed to take out this previous high. We had the first retest here, couldn't take it out. The second retest couldn't take it out, right? And this area has become our area of resistance, strong resistance on the gold market. And then we have our all-time high, which is here. But the markets have tried to take this out and couldn't. When the market begins to create equal high in a strong uptrend, you see the market start to consolidate or move in a range. And all you have to do is to look at most recent price action, which is here. Don't worry about the middle. We're on the daily time frame. I know that you guys can see some, minor key levels in the middle, but you're not going to force yourself to identify them on the daily. When you go to the 4-hour time frame, you can start to spot these other key levels. But the thing that you've come to note on the higher time frame is we've had 3 major rejections in gold, right, on the higher time frame, and this is telling you that this upward move is beginning to slow down. But if we get to break above these points, then we're moving further to the upside. But currently, because we're looking at price action, recent price action, what's going on is the market is beginning to slow down. Now, if we've come to the 4-hour time frame and we're now able to spot even smaller key levels like we have here, and even the ones that we have here, right? Going to reduce this to 1. And the idea of using key levels is to identify possible areas where the market could make retest based on what the market has done before. That's what you're trying to do. Now let's use the let me give you guys a scenario, right? Let's say you're looking at NFP coming out at 1:30 p.m., right? And the report has been released. Obviously, I don't usually tell traders to trade the market when the news is being released. I like to wait after the news has been released to trade the market, right? And this was a good trade that we caught for NFP today, but I'll just use the explanation and tell you guys what happened, right? Now, remember, we're on the higher time frames, and I showed you guys the initial move. Now we're on the lower time frame, but when we're at the higher time frame, I showed you guys the initial moves and then the consolidation, which means that buy momentum has now turned and is beginning to slow down a bit. But we cannot say that gold is bearish at the moment. Why? Because we still have this level to take out. As long as this level is standing and the market has not made any retest or a break above this level or even any potential retest at this level, we're still pretty much looking at a potential move to the upside on gold, right? But we can just call what's going on right now a consolidation or the market catching its breath. This is not an indication of a bearish move or a reversal yet, right? We would have that confirmation when the market gets down to this level, make a retest and a potential breakout, because it's going to turn this into a triple top. We have 1, we have 2, we have 3, and then we have the neckline, which serves as support. All right. And in that case, we'll be looking at something like this before anything else. But currently, we're not going to factor all this into the news trading because, again, we've looked at NFP. We're seeing that the numbers came out really nice for the dollar. So we're expecting gold to drop, which it already did, right? Now, if you don't want to get caught up in this move to the downside and to the upside, but you want to trade the news, what you can do is to wait for the news to create this spike. When the news has created this spike, you look to the left. It's all about looking to the left to know what could possibly happen on the right hand side. Now, if you look to the left, you'd see that we have, first of all, this level. I'm going to increase this so you can see it properly. Let's change it to a normal line. We also have this as well. And we have all these smaller levels in the middle. And we have this one too. And then on the downside, we have this level here and this one, right? Now you've been able to identify key levels on the left. You've seen the markets break above these minor levels, come all the way down and push back up. But remember, the news came out positive for the dollar. So we're going to still look at the possibilities of a short-term bearish move on gold. Now, because you don't want to get caught up in a spike like this and you wait out, what you can do, if you don't want to obviously combine your knowledge of price action, which is the retest that we have around this zone. I'm going to extend the zone for you guys to see why this is a retest up here. You can also combine that with the Fibonacci. Okay, I think I'll make this a bit dark for you guys to see. So boom, all the way up to the top, retest. When the market breaks out of this key level, as you can see, broke out of this one, broke out of this one. On its way up, we didn't have any nice pullback here. We started to see the market reject here. You take your Fibonacci 2 and draw it, extend. And what you just did on the lower time frame is you just combined a basic knowledge of price action, break and retest with your Fibonacci. Now, how many of us use Fibonacci? Let me know in the chat. Let me see if I can quickly explain that. If you use Fibonacci, let me know in the chat. So the Fibonacci retracement is a technical analysis tool that helps you as a trader find, potential levels. It can be supply and demand levels where price may reverse, bounce, or consolidate. In this case, it was previous support, right? As you can see around here. And this Fibonacci itself, this retracement is based on what we call the Fibonacci sequence, which is a general rule of life, of nature. It's a series of numbers where each number is the sum of the two before it. 0, 1, 1 plus 2, you get 3, 2 plus 3, 5, 3 plus 5, 8, stuff like that. But in trading, we don't really care about the numbers themselves. What we care about is the ratios that are derived from these numbers. Now, these are the main levels that we use in trading. We have the 0%, which is obviously we call that the start of the move, swing high, swing low. We have the minor pullback, we have the moderate retracement, the halfway, we have 61.8, which is the golden ratio. We have the deep retracement level, but it's still valid. And then we have the end of the move. Somebody said I use it, but not often. Let me know in the chat if you guys understand the Fibonacci. Let me know in the chat if you guys understand the Fibonacci, how to use the Fibonacci, what it means. Okay, Chigozie says, I don't use it. Well, I've just explained the levels for you guys. 61.8 is called the golden ratio. 78.6 is also still valid. You can still use that. It's called a deep retracement point. It's still valid. But basically, what you're able to do by using the Fibonacci retracement tool, in addition with your understanding of price action and this breakout and retest that we have here, is to get that confirmation that the rejection is happening at the golden ratio. But we don't just want to join in that rejection. We want to see the rejection close bearish and a follow-up. The follow-up opened bearish and we're able to capitalize on that, even though TP3 has not hit yet, but this took out TP1, TP2, and TP3. If I go to the 5 minutes time frame where this trade was executed from, you see that all these TPs were based off a swing level. I'll show you guys. Boom, you can see that. So we have TP1 here, this swing, TP2, this swing, TP3, this level as well. I can extend that, and then you can see the breakout level for this previous movement. Now, what are some of the mistakes that traders make, most traders or beginner traders make when they use the Fibonacci? Sometimes they draw the Fibonacci in the wrong direction. If you're looking at the movement to the top side, you go low to high. To the downside, you go high to low. Sometimes they use the Fibonacci on a messy chart. You can only just use it on a clear swing move. You can use it on the higher time frames. But I personally like to use it for, massive impulsive moves like this when the news is about to happen or when the news has happened already. Now you have to understand that the Fibonacci is a guide, right? You already saw a retest here. You already extended this retest and saw how important it was. Let me go to the 15 minutes time frame so we can have more room. You already saw that this is a key level for us, and the market broke out of it and just came back to retest before using the Fibonacci as extra confirmation. You don't expect it to work 100%. Use it as a guide. Don't ignore your confluence. Don't just use this, the Fibonacci in isolation. Combine it with support and resistance, trend lines, moving averages, price action. And when you do that, you'll be able to identify high probability setups. All right, guys, at this point, you're going to ask me some questions. This is the question and answer section of today's live trading session. So if you have questions, please go ahead and ask me some questions in the chat, and I'll be happy to answer all your questions. And while you do that, remember that after today's session, you can use the link in the description. There would also be a link in the chat as well to download the Octa trading app. It offers a wide range of trading instruments with low spread, fast execution, and zero commissions. It also has various educational resources, 24/7 customer support, and a strong commitment to funds and data security. And when you get the app, you want to make a deposit, you want to start trading live, you can use this promo code. Or if you're already trading demo and now you're ready to make a deposit and trade live, you can use the promo code Ambrose E100 to get a 100% bonus on your deposit. You can use the steps here. Open the Octa trading app or visit the official website. Go to your profile, find the promo code section in the menu, type in Ambrose E100 and press activate. You can make a deposit and now enjoy your bonus. Remember that there's a certain volume you need to trade to be able to withdraw your bonus to your bank account or to your trading app or to your trading account and trade more. It's going to be communicated there while you make your deposit. But yeah, questions, guys, questions. Please go ahead and ask me some questions in the chat while I do the summary for today's session. Now, we discussed the ZAP zone trading strategy, what it's about, suitability for traders, and we also used it to analyze the gold chart. We reviewed the strategy on the live chart in today's session, and we talked about some principles with economic trading, economic calendar understanding, and also the Fibonacci retracement as well. Now, these are the key takeaways I want you guys to get from today's session. Analyze these instruments to understand how they behave under various market conditions. Review your actions and reflect on your decision to identify what worked well and what can be improved. Keep up with the latest market news and updates. You can use the Octa economic calendar for that, or the Octa trading app. You get notifications on your phone concerning what's going on in the charts and what expert traders are saying as well. And use educational resources like this one you're on and other live trading sessions on the Octa Broker YouTube channel to enhance your understanding of trading, the strategies, and also the tools. Guys, question time. Is gold going to be bullish or bearish? Temporarily, gold is bearish, right? Just temporarily, but you know, in the overall trend, we're still pretty much bullish on gold. But based on the news that's just been released, we're going to see temporal, down movement on gold, so temporal consolidation, retracement. But overall, gold is still pretty much bullish. Let's see, guys. Do you have any other questions? Now, for those of you that, because I saw someone ask about the Fibonacci in the chart, that he doesn't know where the 0 to 100 is located. You can see the 0 here, and you can see the 100 here. So in Octa is 0 and 1. All right, 0 and 1. But this is the 0. This is the 61.8 golden ratio, which is 0.618. And then we have 100. So 0 here, 100. All right. If the economic calendar for USD is indicating bullish, while that of JPY is indicating bullish, how do you combine the two knowledge in order to understand the movement of the markets? This is from Hitawa. Now, when you see two markets indicate bullish, one of the things you should consider is what is the momentum of these two reports? Because one could be high impact, the other one could be low impact, and they're both bullish. That's one. In a case where both of them are high impact, you look at the technicals. You combine what's going on the charts, the key levels, the initial trend to identify what's going to happen. When you look at economic events, you have to understand that some of these events can have instant reactions, some can have long-term reactions. Like interest rate decisions, they have long-term impact. They have long-term impact on a particular currency. So you look at the impact level, high impact, low impact. You look at the duration. Is this a long-term news? And then you look at technicals. What's going on technically? Are we looking at initial uptrend, downtrend? How can I use my understanding of technical analysis, supply and demand zones to identify areas where I can trade? That's how you do it. Blockchain Nomad is asking, my question is about trade management. How do you manage your trades while they are playing out, and what do you look out for that you use to close positions? Well, at the start of today's live session, I told you guys that before I even execute the trade, I already know the exit point. The only way I'm closing that trade before it hits TP or SL is if I see something like a candlestick momentum that tells me to go out early. But if the trades are playing out, I allow it to run to take profit or SL. I'm seeing a bearish on gold before the bull entry, but XAUSD is still bullish. Yes, it's still pretty much bullish, on the overall charts, but we're just seeing some consolidations and some minor pullbacks going on right now. All right, guys, if you have any other questions, you can always ask in the chat. I'll probably respond to them via, comment. Will probably respond to your comments in the live chat or in the comment section as well. And if you're going to be watching this video after this live session, you can still go ahead and ask your questions in the comments. Guys, we value your feedback, so please take a moment to fill out our survey. Your feedback is essential for us to improve our future webinars. You can scan the QR code on your screen or you click the link in the description. The survey will take only 1 minute of your time. Now, before we wrap up, guys, remember this: the market will test your patience, the market will test your discipline and your mindset, not just your strategy. But the ones who, go far, the ones who make it in this business are not the smartest. They're the most consistent and the most resilient and the most focused. So today's session was not just about understanding the markets or trade. It was about learning how to show up, how to stay calm under pressure, and how to trust your process. Now, this is just the beginning. It's the start of July. It's the third day of July. July is yours if you choose to stay locked in. Remember, you don't rise by magic, you rise by mindset. So keep learning, keep refining, and keep showing up. And one day, your consistency will turn into mastery. Thank you guys for being here, and let's make sure we make the best out of this month. I'll see you guys in the next one.